Let's bring him on now. Osaic Chief Market Strategist Phil Blancato. Phil, my man, congratulations.
Thank you. It's an honor, it really is. Thank you.
I mean, this is huge. And, listen, obviously you deserve it. Let me ask you, so far, what do you think? What we know, right? The Fed, a lot of changes on the summary of economic projections. They did the cut, but weird dissents, 3 dissents. What do you think? Where are we right now?
I think we're still probably 25, maybe 50 basis points further higher than we should be. If you think where the natural rate is, where the lending rate should be.
Is it a hawkish cut? Did it live up to the hype?
It's a hawkish cut.
It is a hawkish cut.
But what they're discounting here is they're not assuming that AI is going to bring in any deflationary aspect to the economy whatsoever, and I think that's a mistake.
Okay.
I think we're going to see some from that, whether it's in wages, whether it's in the labor market. So I do think they're going to end up with 2 cuts next year, and we'll get to where we want to be.
How surprising you, though, they went so high on the GDP for next year, right? In June, I think it was 1.7, September 1.8, now 2.3. That's huge.
There are 2 pieces to that bill which I think are really powerful. One, lower taxes. That's a tailwind to the consumer. But with consumer spending for the fourth quarter is beating expectations by 4%. You go in lower tax on tips. Well, you think about what's up with Social Security. You think about SALT. And then this gigantic opportunity for corporations to go to almost 0 taxes. That's the tailwind they're hitting on, and to me, they're showing up. And I don't disagree with them. I think that's real.
All right, so Secretary Besson's been having a ball on social media.
It's a lot of fun.
And I did think about you with this, right? Because you and I talked a lot in the last few years about bond yields, right? Yep. The 60-40 portfolio, it's been devastating. It's been, people got crushed. Right, so, but, he's pointing out bonds are up this year. In fact, Franklin the Turtle bought some bonds, and he's made a lot of cash. You were buying bonds when no one else was still buying them. Are you still a fan?
Yeah, we're still duration plus about a year. So the ag has about a 6-year duration.
Okay.
So duration plus 1 year, or ag duration. And that gets us right about 7 years. Why? Because I can get a wonderful yield and I get price appreciation. Every time the Fed has cut rates in history, and this time's a little different, you've won in the bond market. I think it's not just insurance anymore. You can make some. 2020, 26 will go down as one of the year of the bonds.
And Franklin the Turtle, you still, you guys still talk?
Right. Yeah, that's my buddy.
Here's a big, it's somewhat controversial, the T-bill issuance. And what's the game plan here? Obviously, Yellen started this, but Besant likes this strategy as well. What does it mean for long duration yields? What does it mean for the economy?
We always forget that the U.S. economy is far and away the biggest in the world and the deepest currency in the world. So all this nonsense about losing the default currency will never happen because of this. Because you got deep liquidity on the front end of the curve that the government is constantly in there creating liquidity. It makes opportunities for banks and for investors. The reason why it's good for the government, they pay the lowest amount of money on the debt, gives them great nimbleness, leverage. Right. We blew it. We should have issued hundreds of billions of dollars in 30-year bonds when rates were down at 1.5%. We didn't. So this is the next best way to manage the U.S. economy and keep the liquidity going.
I want to get your idea. We got a minute to go in these stock picks. I'm just going to cut straight. Morgan Stanley, we kind of talk financials a lot.
Yep.
FedEx, to me, looks like a company that's limping, that's rudderless.
I like it. 5% dividend, buddy. I love dividends. I love being paid the way around. They took $1 billion.
What if the principal keeps going down, though? The stock,
that's okay.
Are you okay with it?
You get paid the way around. They took $1 billion out of cost. You know where AI is going to matter? Here. In the supply chain and movement of things. When they can become more efficient with AI, cuts their costs, boosts their revenue, I just think I love the dividend and be paid the way
Southern Copper.
Copper. Yeah. And at the end of the day, we don't make copper in this country. We got to buy it from somewhere else. If you think we're really going to build the American electrical grid, go from 3% to 12% for data centers for power, and do it inexpensively, you got to own copper.
All right, my man. You stand for the panel?
Yes, sir.
It's going to be a good one.
Thank you.